So contribution margin is defined as the difference between per visit revenue and the variable cost rate. So every patient or every visit that a patient has and the revenue that you generate from it, and you subtract the variable cost rate from it, that gives you the contribution margin. Okay, so basically, contribution margin is it looks like profit because you have removed the variable cost rate from the revenue and it looks like profit, but you still have to add the fixed cost to it because the fixed cost is still not covered. So it is saying it here. It is the amount of each visit's revenue that is available to first cover fixed cost. Whatever you get from there, you need to cover your fixed cost, and then that flows to profit when the fixed costs are covered. Now, the illustration that we have seen for Riverside, the contribution margin is $100 minus 28.18, which is the variable cost rate that we calculated a few slides ago, and that gives us $71.82. Now, what is the total contribution margin? And we are talking about 75,000 visits here. So the 75,000 visits multiplied by 71.82, which is the contribution margin right here, um, 71.82 gives you the total contribution margin. And the break-even analysis is performed in many different finance contexts. A break-even analysis is basically trying to estimate the amount of volume, price, or variable cost rate that you need to break even. Break-even point is the point where you break even, and that is a value of a given input variable that produces some minimum desired result. So whatever the value of a given input variable it is, and as long as it is producing some minimum desired result, that is called the break-even point. And that is also used to determine the break-even volume, which is defined as the volume needed for an organization to be financially sufficient. Because only when you break even the volume, you know that whatever you are spending in your business, you are recovering it. Okay, if you decide that I am going to rent a $1,000 office space per month and I'm going to use it as a medical clinic, but you are not even breaking even, you are not even making $1,000 to cover the cost of the rent, that is a problem. So you want to be at least breaking even, and that volume, how many patients you get at your clinic, maybe 100 patients to generate that $1,000 of rent, or maybe 50 patients. So that volume is what we need to know, so that you know that you are self-sufficient, financially self-sufficient as a clinic. And there are two types of break-even: accounting break-even and economic break-even. Accounting break-even is the volume needed to produce revenues that is sufficient to cover all accounting costs. You have not made any profit, so there is zero profit, zero profitability. Economic break-even is when the volume is required to produce revenues that is sufficient to cover all accounting costs and to produce a specified profit level. So in economic break even, you're saying that not only do I want to cover the cost of my rent, my salaries, my equipment and supplies, but I also, and parking fees and stuff like that, but I also want to make some profit in addition to covering all of the costs, all of the accounting costs. And that is economic break even. So important to understand the difference between accounting break even and economic break even. There is no profit included here. You are just trying to cover all of the cost. Economic break even, you are also trying to make some specified profit level. So here is the break even analysis for Atlanta Clinic. Accounting, so we're talking about the accounting break even for Atlanta Clinic here, and at what volume do we make zero profit? So the total revenues is 100 multiplied by the volume, and you subtract the total variable cost. Remember, the variable cost rate is 28.18 for Atlanta Clinic, and that is multiplied by the volume, and then you minus the fixed cost from it, and that gives you a zero profit. So 71.82 multiplied by which is the contribution margin. We just saw that it was the contribution margin right here, contribution margin, and that multiplied by the volume gives you the fixed cost. So the volume is fixed cost divided by the contribution margin, and that gives you 69,165 visits that is the number of visits at which we will be accounting break even for Atlanta Clinic, and that means we will not be making any profit, but we will cover all of the costs for Atlanta Clinic. Here's the contribution margin format for break-even analysis. So note that the break-even equation can be reformatted in a contribution margin format. So you multiply the contribution margin with the volume, and that gives you fixed cost. So this is the contribution margin, and here is your volume, and that gives you the fixed cost. So the volume equals, which we just did right here, equals fixed cost divided by contribution margin, and that gives you the number of visits. And they're doing the same thing here, fixed cost divided by contribution margin to give you the number of visits. What is the economic break even if the desired profit level is 100,000? So now you are saying that you want to make some specified profit level, which is $100,000 to economic break even. So now you are adding the profit to the fixed cost, but you still on the left hand side will multiply the contribution margin with the volume, and you will get fixed cost and profit. So the volume is fixed cost divided by the fixed cost and profit summation. So the fixed cost was $4.9 million, approximately $5 million right here, and then you add the profit of $100,000. So that becomes $5.067462, and you divide that with the contribution margin to get 70,558 visits. So note that the accounting break even is 69,165 visits. So the additional number of visits that we need to make some profit is 1,393. And the 1,393 multiplied by C's contribution margin gives you $100,000. So this is just saying that this is the profit that we make. But the more important number here is 1,393, which is saying that if you want to make some profit on top of fixing your cost, covering your cost, all your fixed costs, you need to get another approximately 1,400 visits for Atlanta Clinic.